Good afternoon, ladies and gentlemen, and welcome to Richelieu Hardware First Quarter Results Conference Call. At this time, all lines are in a listen-only mode. Following the presentation, we will conduct a question-and-answer session, which will be restricted to analysts only. If at any time during this call you require immediate assistance, please press star 0 for the operator. This call is being recorded on April 6th, 2023. Bonjour mesdames et messieurs et bienvenue aux résultats du premier trimestre de Quincaillerie Richelieu. Présentement, vos lignes sont en mode d'écoute seulement. Suite à la présentation, nous allons procéder à une période de questions et réponses qui sera restreinte aux analystes seulement. Si vous avez besoin d'assistance au cours de l'appel, appuyez sur étoile et 0. Veuillez prendre note que cet appel est enregistré le 6 avril 2023. J'aimerais maintenant céder la parole à M. Richard Lord, président et chef de la direction. À vous la parole.
Merci. Thank you. Good afternoon, ladies and gentlemen, and welcome to Richelieu's conference call for the first quarter ended February 28, 2023. With me is Antoine Auclair, CFO. As usual, note that some of today's issues include forward-looking information, which is provided with the usual disclaimer as reported in our financial filings. We started 2023 with good results for the first quarter, and we are pleased to have seized new acquisition opportunities as we completed 4 transactions in Canada earlier this quarter and 1 in the US on April the 3rd. It's important to note that the comparative numbers of 2022 were exceptionally strong, benefiting from the business context resulting from the pandemic. Just in the first quarter of last year, sales increased by 29.2% and EBITDA by 40.8%. In the first quarter of 2023, our sales increased by 4.8% or 18.5 million, including 1.8% organic growth and 3% from acquisition to 403 million. We are also proud to mention that our US sales now represent 43% of our total sales. With the acquisition of Quincaillerie Rabel, Transworld Distributing, Unigrav and Usim in January 2023, we strengthened our presence in Eastern Canada, and after the end of the quarter, we completed the acquisition of Maverick Hardware in Eugene, Oregon, which reinforced our presence in this market, where we already operated a distribution center in Portland. With this 5 acquisitions, we add $22 million in annual sales, new customers, complementary products, and teams that are experienced in their market. The expansion, modernization, and opening of centers in the U.S. have progressed well, including Atlanta, Nashville, Pompano, Seattle, and Chicago. We moved our Fort Myers operation in a brand new building, and our new location in Carlstadt, New Jersey, and Minneapolis are now open for business. In addition, by the end of the year, we will consolidate 2 centers in the Calgary area, in which we will include a first-class showroom while increasing our service capacity in Western Canada. Following these recent developments, we are now operating 113 interconnected centers, 50 in Canada, 60 in the US, plus 3 manufacturing facilities in Canada. Antoine will now review the financial highlights of the quarter, and then I will conclude and will take your questions.
Thanks, Richard. First quarter sales reached 403 million, up 4.8%, of which 1.8% from internal growth and 3% from acquisitions. In comparable currency to the first quarter of 2022, total sales growth would have been 2.2% for the quarter. Sales to manufacturers stood at 344 million, up 5.4%, of which 2% from internal growth and 3.4% from acquisitions. In hardware retailers and renovation superstores market, we achieved sales of 59 million, up 0.8 million or 1.4%. In Canada, sales amounted to 231 million, same as last year. Our sales to manufacturers reached 185.5 million, and hardware retailers and renovation superstores market, sales stood at 45.4 million, up 3.4%. In the U.S., sales grew to $127.7 million in US dollar, up 5%, all from acquisitions. They reached $172 million in Canadian dollar, an increase of 11%, and represented 42.7% of total sales. Sales to manufacturers reached $118 million in US dollar, up 6.2%, 0.7% from internal growth, and 5.5% from acquisitions. In hardware retailers and renovation superstores market, sales were down 10.6% from the corresponding quarter of 2022. First quarter EBITDA reached $49.1 million, down $4.6 million or 8.6% over the first quarter of 2022. Gross margin remained stable, and the EBITDA margin was 12.2% compared to 14% last year. First quarter net earnings attributable to shareholders totaled $22.4 million, down 25.6%. In addition to the fact that 2022 first quarter was a period where our financial results were especially strong, the factors that also affected our results were mainly the return of operating expenses closer to pre-pandemic levels, as well as outside warehousing costs due to temporary inventory increase, amortization and costs related to our U.S. expansion projects, as well as the interest rate on the line of credit. Diluted net earnings per share was 40 cents compared to 53 last year. First quarter cash flow from operating activities before net change in non-cash working capital balances was $38 million or 68 cents per diluted share. The net change in non-cash working cap used cash flow of $22 million, mainly reflecting the decrease in accounts payable and tax payable, while accounts receivable represented a cash inflow of $8.4 million. As a result, operating activities represented a cash inflow of $16.5 million compared to cash outflow of $37.5 million in Q1 2022. Regarding our inventory position, as indicated last January, inventory levels stabilized in February and started to decrease thereafter. We paid dividends of $8.4 million to shareholders, and we invested $22.3 million, including $15.8 million for 4 business acquisitions and $6.5 million in CapEx. At the end of the quarter, financial situation was healthy and solid, with working capital of $564.9 million and an average return on shareholders' equity of 21%. I now turn it over to Richard.
Thank you, Antoine. We are confident we will seize and create new short and long-term growth opportunities and deliver solid future results. We stay alert and are monitoring market conditions while keeping a disciplined approach in cost control. We will build our strengths with the exceptional quality of our team, the distinctive quality of our service, our ability to innovate, to pursue strategic acquisition, and to integrate them efficiently, while using our flexibility to adapt to changing market conditions. Richelieu remains customer, innovation, service, and results-oriented. Thanks, everyone. I'll now be happy to answer your question.
Thank you. Ladies and gentlemen, we will now take questions from our analysts. Should you have a question, please press the star followed by the 1 on your touchtone phone. If you'd like to withdraw your question, please press the star followed by the 2. If you're using a speakerphone, please lift the handset before pressing any keys. One moment, please, for your first question. Your first question comes from Amir Patel from CIBC Capital Markets. Please go ahead.
Hi, good afternoon.
Good afternoon.
Richard, could you comment on how demand has fared in March for both on the manufacturers side and retailers segment?
Yeah, the demand for the month of March, as we speak, was a high single-digit down, which is still very good performance, considering that last year for the same month we had an increase of remember that, Antoine? It was 18% for the month of March organic growth. So basically, we compare ourselves with the best month ever. The last month of March of 2022 was our best month ever in this company. So we sold something like $130 million. So basically, we're quite satisfied with the current sales performance, in spite of seeing a high single-digit decline on sales. But in the circumstances, we still think it's very good.
Thanks, Richard. That's helpful. And the high single-digit decline, how much of that is price versus volume?
Nothing. We have not seen any price deflation. We've managed the business, to make sure that our pricing was stable for the quarter and for the month of March as well. So far, we didn't see any deflation in our pricing.
And Richard, when we look back in recent years, there's been quite a big increase in organic growth. I don't know if you have the figure on hand, but do you have a sense as to, from the sort of beginning of the pandemic, kind of early 2020, how much price inflation you've seen through your results, and what type of deflation would you still expect to play out, just given maybe pass-throughs on freight and some moderation maybe on some products?
Inflation last year in 2022, I think, was something like a 10% due to the price increasing because of what you mentioned for the freight. We see the freight now coming back to normal, but since we don't receive much inventory as we speak, because we still have to decrease the inventory that we already have on hand, which is already priced at the high cost. But I think all our competitors have to live with the same circumstances. But the sales are still maintaining good, so we expect to have one turn of our inventory before the end of the second quarter. So things should improve. And also we have to consider that we price our inventory based on average cost. So basically, it's going to be almost a full year before the costs come back to where it should be as a normal costing. And again, that's not negative, because that does apply to any business in the world. We have to live with the same circumstances. So basically, that's about it.
Okay. No, thanks. That's helpful. And just the final question I had, Antoine, it's been kind of with another quarter of visibility. Do you have a sense as to, where you would expect EBITDA margins to stabilize? I'm just thinking maybe on a 24 basis.
Low 14, Amir.
Low 14. Okay, that's great. That's all I had for now. I'll turn it over. Thanks.
Thank you.
Ladies and gentlemen, as a reminder, should you have a question, please press the star followed by the 1. Your next question comes from Zachary Evershed from National Bank Financial. Please go ahead.
Thank you. Good afternoon. Thanks for taking my question.
Good afternoon.
So you mentioned that March organic growth was down high single digits, but perhaps there's a lower bar in the other months for the quarter since it was an all-time high in March. What are your hopes for the pace of organic growth in the quarter as a whole?
Again, the second quarter last year was very strong in terms of growth as well. So there's no way we're going to match the growth that we had last year. But what we see now, I guess it's the trend that we're going to see for the quarter. Antoine, what would you say about that? The growth was what for the total?
The second quarter growth last year was 11% in Canada. I'm talking about the internal growth, and 23% in the US.
It was very, very strong. So basically, if we maintain the performance that we had in March, I think that's still going to be good. Hopefully, we're going to do better.
Gotcha. And inventory rose quarter over quarter. You're hopeful for a decline this year. Can you give us an update on how that's trending so far in Q2 and where you hope to end the year?
Yeah, it's the same answer as the one in January, Zach. So increase in December and January, stabilize in February, and it started to decrease in March. And the plan is to decrease from 60 to 80 million.
That's great. Thanks. Quick questions on your organic expansion projects. For locations where there isn't a showroom in place, how much does it cost to set one up? And do all of your facilities lend themselves to an extra room being used in that way?
Basically, when we make some expansion projects, we rent more space, and we either improve the showroom or innovate a new showroom. A new showroom would cost something like $250,000, while in the expansion of the warehouse requires some racking. That's it. Racking, for a 50,000 square feet warehouse, we're talking about maybe $200,000.
That's helpful. Thanks.
And Zach, in the quarter, in the 6.5 million capex, you have approximately 2.5 million for all of the expansion that we're talking about, either the new ones or the one that we're moving.
Okay, that's great color. And then on those expansion projects, what's left to do in the quarters ahead?
We're gonna finalize the Nashville ones should finalize that in the second quarter. We're gonna finalize Atlanta as well, Seattle. So lots of things will be moving in the second quarter, and after that, it should be business as usual if we don't have any more projects.
Thank you. How do clients generally respond when you consolidate facilities? Is there any loss in relationships there, or does it carry over well?
No, I think our customers are happy when we expand our space because they know that we're going to have more products. So very often we add decorative bulb panels, for example, which our customer like very much. At Richelieu has that type of product, but because we sell higher end decorative panels, and our customers are very well attracted by those panels because it does create more value for the product that they sell to their own customers. So basically, it's very positive.
Great color, thanks. Then just one last one. Gross margin seems stable, no pricing deflation yet. Could you give us more color on the return of operating expenses to closer to pre-pandemic levels? How will that impact margins in future quarters?
I think that we're where we should be. In the last 2 years, we've mentioned it. So it was the expenses were very low. People were not traveling. Promo expenses were very low. So now it's back in terms of payroll because the cost structure at Richelieu is pretty simple. We have people and we have locations. So in terms of payroll, we're where we should be. And regarding the rent, we have all of the new location in place. The rent are increasing, but we're where we should be. So we are at the level required to maintain the business volume, but in terms of ops cost, in terms of percent, we're still better than what we were before the pandemic.
That's helpful. Thanks. I'll turn it over.
Thank you.
Richard, there are no further questions at this time. Please proceed with your closing remarks.
So thank you very much for attending this call. So if anybody wants to call us, we're already open to talk with you. Thank you very much.
Ladies and gentlemen, this concludes your conference call for today. We thank you for joining, and you may now disconnect your lines. Thank you.